Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Here is Laurie Bailey with EURUSD currency pair forecast. Let's have a look.
The euro is rising for the fourth consecutive day. The gap at 1.1741 is close to being filled, and slightly above it lies the key target at 1.1779. On the daily chart, the Marlin oscillator signals line is breaking into the territory of an uptrend. The current outlook appears optimistic, but correlated markets are signaling a possible reversal. Yesterday, the S&P 500 declined by 0.63%, oil dropped by 1.48%, and the yield on 5-year US Treasuries fell by 3.61 to 3.53. If this trend continues, even at a slower pace, the euro is unlikely to reach the 1.1908, the upper boundary of the price channel. Today, Eurozone inflation data for September will be released. The forecast for the CPI is an increase. If this forecast proves accurate, the euro could reach the 1.1779 target within 2 or 3 days. However, if the price falls back below the MACD line 1.1660, the euro might become stuck in a sideways range, similar to the pattern observed in August ahead of the September Fed meeting. Now, markets look ahead for the next Federal Reserve meeting, which is just over a week away. On the 4-hour chart, the price continues rising above the indicator lines. The MACD line is beginning to curve upward, while the Marlin oscillator shows a downward bias. This mixed signals, especially on Friday and on the day of a major CPI release, create ideal conditions for closing long positions.
And we're starting with pound sterling dollar pair with Tin Lao.
On the hourly chart, the GBPUSD pair on Thursday consolidated above the 1.3425-3431 zone, allowing traders to expect a continuation of growth toward the next Fibonacci level of 50%, 1.3487. A consolidation of the pair's rate below 34.35 and 34.31 level would favor the US dollar, and a moderate decline toward the 1.3357-3360 support level. The wave pattern turned bullish almost overnight. The last completed downward wave broke the previous low, but the most recent upward wave broke the previous peak. The news background in recent weeks has been negative for the US dollar, but bullish traders had not taken advantage of the opportunities to advance until now. They are finally beginning to spread their wings. On the 4-hour chart, the pair reversed in favor of the pound after forming a bullish divergence on the CCI technical indicator, followed by growth toward the 100% retracement level at 1.3435. A rebound from this level would allow to expect a reversal in the favor of the US dollar and a moderate decline toward the 1.3339 level. A consolidation above this level would increase the likelihood of continued growth toward the next Fibonacci level at 127% at 1.3795. There are no emergent divergences on any indicator today.
That's all for today. See you online soon.